economists say there's a possibility of a rate cut this afternoon as inflation remains contained. Many believe the Monetary Policy Committee of the Reserve Bank will likely cut the repo rate by 25 basis points when it makes its announcement later this afternoon. If left unchanged, the repo rate will remain at 7.25%, while the prime lending rate, that's the benchmark rate at which commercial banks lend to their customers, will remain at 10.75%. Inflation remains below the midpoint of the 3 to 6% target range, with the Bureau for Economic Research expecting headline consumer inflation to average 3.9% during 2025. Now, in the United States, the U.S. Central Bank has kept interest rates unchanged again due to uncertainty around the impact of tariffs going forward.
In South Africa, we have found that local inflation has been in a bit of a sweet spot. Our local currency, the rand, has actually been relatively well behaved in spite of global economic and political uncertainties here back at home. On food prices, even though we did see a little bit of a blip higher in recent months, we know that we've had good harvests and the international price of food has been relatively stable. Even when it comes to something like oil prices, despite the Iranian conflict, global supplies of oil have remained robust, and that has capped the price of oil. We've also seen that domestically, we've got quite a soft housing market in South Africa, and this has kept a lid on rental inflation for the last couple of years now. Even something like administered price inflation, which tends to exert quite a lot of upward pressure on the headline profile for South Africa's inflation, has also remained relatively contained in the last couple of months of prints. We've seen that the Reuters Econometer poll for expected inflation from the market's perception has remained relatively stable between June and July. The market is anticipating an average inflation figure of 3.4% for 2025, inching higher to 4.4% for 2026. This means that, largely speaking, the market is anticipating that headline inflation will largely remain below the midpoint of the target band for the most part of the next 2-year period.